Hi, welcome to the Market Alert for Thursday, the 21st of September 2023. So the market's reaction to Powell and the FOMC, well, it's put here succinctly. Stocks and bonds slammed as Powell pees in next year's punch bowl, both confused and confusing. That's because he said that FOMC leaves rates unchanged, signals much more hawkishness in 2024. So looks like we've got more. What it says here, the Fed removes 2 rate cuts for 2024 there. So that means that they're going to remain hawkish on the markets as far as rates are concerned. US stocks declined and bonds were pressured after hawkish Fed plots. And Wall Street reacts to Fed's confused 2024 hawkish shock. So it depends whether this is all just, 2024 is still some way off. And it could be in the latter part or the third quarter of next year. So it's likely to be brushed off and sooner rather than later anyway. Interesting one again about volatility, because we haven't seen any now for a good month. Remember when we moved? Absolutely. I mean, we moved last night, but it depends on whether the market will continue with that now and they actually want to price this in. But blimey, it's I've never seen anything like it as far as volatility. It did spike up to 12% yesterday. Which I haven't updated yet in the charts, but I will do, and we'll have a look at that tomorrow. So, yeah, we just, let's have something that really gives the market some movement, direction, and volatility. It's getting a bit boring now. Economic news for today, we've got UK monetary policy. Oh, here we go. We got the official bank rate today for the UK. I missed that one this week. We're going up to 5.50 according to this. So the UK are going to have raise rates. Well, this might be enough then to get the markets moving then as they continue to do this. Then to the US for the manufacturing and Philly Fed. And then Lagarde, the criminal herself, is going to be out at 3 p.m. Discussing obviously how good Europe is and how well it's doing. So anyway, let's move on, have a look at the markets, kick off with the down and see what its reaction was to last night's FOMC meeting minutes. So we've got the Dow moving lower yesterday. In fact, let me just widen this out a bit so we can see. You can see how sideways it is, can't you? I mean, we're range bound here. And it's been like this, like I say, for the last month. It's unbelievable. So, we're moving lower overnight as well. So let's have a look at this in a bit more detail. Also, we're coming down to these 2 green lines as well. If we break those, there's a good chance of going down to this 78% retracement where the market started its sideways and range-bound movement there. So in the 30 minutes, they pumped the markets to the upside in anticipation that Powell wouldn't do a lot, or maybe that he was going to remain hawkish. But prices obviously said, hang on a minute, and they declined somewhat by the end of the trading session. And overnight, they continue to move lower, already below the low, which is why it's important to have a look at the daily chart just to see where we are with these numbers. And also, just for reference, whilst I'm recording, let me just throw in these other lows as well, which you can see there. So let me just drag that one out so you can see the numbers. So they're the lows in the Dow if you trade it and you want to keep an eye on whether this support is going to be broken or not. They're the interesting ones. But also keep in mind that we could soon reverse back above the low there and go back up. It wouldn't be the first time that they've done this, where they just discount completely what Powell has said. Okay, let's move on. Have a look at the DAX. Again, in the German DAX, you can see this defined sideways range that we're in. It's going to break one way or the other, and when it does, then the volatility will return. But God, it's desperate at the moment with this lack of direction. Even, like I say, the news wires are talking about the lack of it. We've got 89% retracement there. Market moving down overnight below yesterday's low, which you can see there. And you can also see the decline from last night as well, 150 points decline there. No, it's 200 points, including the overnight. So, down 100 points actually overnight, as we can see there from the close down to here. So just 100 points move there. That'll be good. It's about time we had some 100-point moves overnight again. So yeah, we'll see what happens. But at the moment, the market's not happy with Powell. In the S&P 500, this also moving lower. As you can see, last night down. You see a big shakeout there. Market up, sideways. Powell, Bosch down, and then again we're just underneath the low there as well. So keep an eye on the daily chart for numbers on the downside, and see if the market gets to any of these. These are previous fibs drawn in from there. Well, this one's drawn in from there to there, and then you've got the other one as well drawn in from there to there. So yeah, we'll see what happens during the kickoff this morning. So there's the decline in the S&P in the intraday, and in the FT100 also down a bit there as well. And of course, yesterday we had the inflation numbers from the UK, so this sent the market racing to the upside to begin with, straight off the low, as you can see there at 7 a.m. on the electronic market, but down on the overnight, but still above the low of yesterday actually, so a lot stronger than the other markets at the moment, interestingly enough there. So in the US dollar, market reacting yesterday down, then back up and up on the overnight there as well. In the metals market moving up and then being slammed, trying to move up on the overnight market there. You can see we moved up and then we got slammed last night, and the same for the gold market as well, trading up to 89% retracement in the daily before being slammed, as you can see there, and all the way down to yesterday's low. So let's have a quick look at the gold-silver ratio, and this also in a bit of a sideways range at the moment, slightly higher for the silver price overnight there. Okay, let's see what the market does today and how it reacts to Powell yesterday, or his comments from yesterday, and whether we continue on the downside or the market ignores it and goes back to sleep. We'll just have to wait and see. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.